Conrad Saldanha, before we talk about individual stocks, I want to get your opinion as to whether or not emerging markets as a whole are safe right now. Are these problems isolated, or is this something more widespread?
When you look at emerging markets, it's not one homogeneous asset class when you look across these countries and sectors. The one commonality is interest rates and risk premium, and that's what's impacting all of emerging markets. The biggest issue right now facing are the current account deficit countries. The bigger ones are namely Brazil, India, Indonesia, and Turkey, and South Africa. And what you're seeing is an exodus of capital. They're having to tighten just to defend the currency because of the current account deficits. We believe that longer term emerging markets still have growth potential. The question is more, when does interest rates stabilize, and when can they embark on reform to grow the economy longer term and take care of some of the structural issues underlying these economies?
Well, you didn't mention the country of Korea, and one stock you like in Korea is Coway. They make air and water filters, purifiers. Tell me about this company.
Sure. Greg, at Neuberger Berman, we look for good, fundamentally solid businesses, high quality at attractive valuations, and Coway is one of them. They come into your home in South Korea and install air filters and water purifiers. They service it. They write a nice rental contract. Returns are well in excess of 25% for this business, which we have bought historically, trading at 12 plus times cash flow. So incredibly cash generative business.
You're also a fan of Everbright. Now, this is a Hong Kong-based waste energy provider. There's a lot of waste in China, and they need a lot of energy. Tell me about the company.
Sure. China Everbright International is one of those. It's the largest waste to energy businesses in China. They currently have 10 projects across China. In fact, 9 of those would be coming operational this year. So when we look at returns, it meets our minimum criteria of 15%, but it's at the early stage. We believe this business has significant growth just based on the backlog of waste to energy contracts that they have signed.
And then finally, you're a fan of Magnit. This is a Russian retailer. Why do you like this one?
Magnit is the largest discount retailer supermarket chain in Russia. We like the business because of its high returns. They've stuck to their business model and grown organically, generating a lot of cash flow. And right now, when we look at Magnit, people worry about their quarterly numbers, but longer term, you can buy this business trading at just about 12 to 13 times cash flow as well.
All right, thanks a lot.
Great. Thanks.
Thank you for watching The Street.